You know when one of the biggest names in growth investing starts making these quiet, consistent moves, you just have to ask, what do they see that the rest of us don't? Today, we're going to pull back the curtain on Cathie Wood's recent fascination with a very particular fintech player. Is this just a small test, or is it the beginning of a major new play?
So, what exactly has captured Cathie Wood's attention? Well, it's a company that lives right at the intersection of finance and social media. And the pattern of her investment, well, it tells a really fascinating story.
We're talking about ARK Invest, of course, and the company is the social trading platform eToro. Now, when you pair a top-tier disruptive tech investor with a platform that's fundamentally changing how people invest, well, that's a combination that makes everyone in the market stop and pay very close attention.
Okay, so it all kicked off with just a single, pretty significant bet. One initial purchase that suddenly put eToro squarely on ARK's radar, and by extension, the world's radar. For anyone who's not familiar, eToro is a huge player in the social investing space. The whole platform is built around community, letting users see, follow, and even automatically copy the trades of other investors. You can almost think of it as social media meets the stock market. All right, let's get into the details, because this is where it gets really good. To understand the strategy, you've got to follow the money. And as you're about to see, the transaction records don't just show a single purchase. They reveal a pattern of growing conviction.
So, the first move came in May 2025 with a major buy right during eToro's IPO. But here's the thing, that was just the start. ARK came back for more in June, and then they doubled down again in September. This was absolutely not a one-and-done deal, it was a deliberate sequence of moves.
Now let's really break down these numbers. The first bite was the biggest one, almost $9.4 million right out of the gate at the IPO. But look at those follow-up purchases. This tells you they weren't just trying to ride the initial hype. No, these were strategic additions, reinforcing their belief in the company's long-term value, not just its price on launch day.
So, in just a few short months, what does that all add up to? Over $14.5 million. Now, for a fund that manages billions, this isn't a portfolio-defining position, at least not yet. But it is way too big to be just some random flyer. This is a calculated stake that signals some serious long-term interest.
So what does this pattern of buying actually tell us, right? These aren't just random data points on a spreadsheet. They're clues. And when you start connecting them, a pretty clear strategy begins to take shape. A key analysis of these trades just hits the nail on the head. It says this isn't a one-off move, it's a progressive reinforcement. Think about it like building a wall, brick by brick. Each new purchase builds on the last one, strengthening ARK's position and signaling this deep, deliberate belief in where eToro is headed.
And this chart right here shows you exactly what that progressive reinforcement looks like in the real world. You can see the stake they established back in May, then boom, it grows in June, and it grows again in September. It's a clear, visual staircase of increasing commitment. No ambiguity there.
This whole pattern, this investment staircase, it brings us to the ultimate question. What is the end game here? We've seen the what and the how, so now let's explore the why.
So, we're basically at a fork in the road. Which one is it? On the one hand, this could just be a simple test, right? A relatively small exploratory position in a company that looks promising. You know, a standard diversification move. But on the other hand, this could be the hunt for what some are calling a new winning horse. A high-conviction bet that eToro isn't just another fintech company, but a future leader in the entire sector.
The pattern of consistent buying, that step-by-step reinforcement, it really suggests this is far more than just a simple test. But as ARK continues to navigate the wild world of disruptive innovation, the $100 million question remains. Is eToro just another interesting asset in the portfolio, or are we watching them place their early bets on the next true titan of fintech? What do you think?